Now, it seems China's economic stimulus bears some fruit as the country reported better than expected GDP numbers, supported by solid consumption and industrial output amid a tit-for-tat trade battle with the U.S. Head of strategy at Prescient China, Tian Pan, brought us further insight on that print.
Yeah, so the consensus estimates were actually for quite a strong number in Q1, given the range of subsidies that launched in Q4 last year to stimulate consumption, and also a lot of exports that rushed in to be processed ahead of the tariffs. So overall, the number is not a surprise, but it's a pleasant surprise that it actually even beat very strong estimates that were at 5.2. So I think the number was 5.4 for Q1, which is a pleasant surprise.
Yeah. Well, I mean, just drill into those drivers because you mentioned two very distinct factors: domestic consumption that has obviously been stimulated by stimulus, and people really rushing to get, the imports from China, exports on your side. And I'm wondering what level, because at this point you have this one that might not exist anymore or that might soften significantly in terms of domestic consumption, but also exports. And can domestic consumption actually cover what could be missing from exports?
Yeah, so I mean, the Trump tariffs is actually a very, very big deal in China, even bigger than rest of the world, because China has now officially got a lowest tariff of 145%, average tariff of 165%. The good news is that China-US trade is only a small portion of China's overall trade. So if we look at China's total exports to the US, which is around $500 billion annually, it's only around 3% of China's GDP. And with the round of exemptions for certain personal electronics, for example, Apple iPhones to begin with, and if we try and group all together the current goods that are on exemption or on a low 10% tariff, it's probably about a quarter to a third of China's exports that's sort of still unaffected under the current really intense scenario. So directly about 2% of China's GDP currently affected. 2% sounds low, but it's still going to be a massive impact. So you very rightfully mentioned that domestic consumption needs to try and make up for that 2% gap. And that's why we expect some very strong policies to follow last year's stimulus in China.
All right. Well, you talk about the tariffs maybe shaving off 2% off of China's growth. And I've actually seen a lot of financial institutions actually downgrading their forecast for 2025 economic growth for China. I think the lowest that I've seen was from UBS, 3.4%. How are your estimates looking at this point?
So right now, I think UBS is certainly sort of in a reasonable range, given that we haven't seen new stimulus announcements being made. The official government target remains 5%, but without additional stimulus to stimulate domestic consumption to cover for that expected lost exports, we are very unlikely to reach that 5%. So I'm sure if and when the policies come out, we should have revisions upwards. But right now, there's a lot of uncertainty with the expected growth.
Yeah. Well, actually, with that, I saw that there has been a replacement of the top trade negotiation official in China. At this point, are negotiations even on the table between the US and China?
Definitely sort of on the surface of what we can see, the situation is very, very intense. But we have seen there are some glimpses of hope. So, for example, President Trump often mentioning that he's waiting for a call from President Xi of China. And on the China side, last week, there was official publication released that on the Chinese side to describe the beneficial relationship of China and the US through all the years of trade that's gone through, and that China is always open for negotiations, but they need to be respected as an equal, not to be looked down on, etc. So it's going to be a bit of a delicate situation. But behind the scenes, we are hopeful that there are conversations going on.
Yeah, I mean, you mentioned the magnitude of exports to the U.S. from China, and I'm wondering if that comes to a halt, can China then rely on other parts of the world to kind of try and make up for that?
Yes, you're absolutely right. That is exactly what China is trying to do. For example, you'll notice Chinese President Xi Jinping is on a trip in Asia. He was in Vietnam a couple of days ago. He's in Malaysia now, visiting China's neighbors and their closest trading partners in the region. I mean, I mentioned earlier, 90% of China's overall trade with the world is with countries outside of the US. So if they can grow that 90% by 10%, they can almost make up the entire trade with the US, although still without growth. So it is an area that they're openly focusing on, but they are certainly not letting go of the US relationship.
Yeah. As I was drilling through the numbers of the Q1 GDP, I actually saw that the contribution under fixed investment, that real estate actually declined even more. Where's that standing at this point?
Yeah, Chinese property sector, I think we've said for many years now, since 2019, we were early, but it's in a lot of trouble. Property values are still high. Sentiment in the sector is extremely low, which is why you see the sort of negative investment growth in the property sector. New home prices are sort of stable in tier 1 cities, but still declining. So the sector continues to go through a lot of trouble, but the sector continues to receive a lot of attention from government policy support, not to revive it, but to make sure that it's an orderly decline. And it continues to be an orderly decline, unfortunately.
Well, and we will be looking closely at what China comes out with in terms of economic stimulation and the stimulation of the domestic consumption. Thank you so much for your time and for your insights there, Tian. Much appreciated. That was Tian Pan, Head of Strategy at Prescient China.